want to be aware. If anything you guys are willing to ask before I start, please ask now. Okay, I'm just want to share my screen real quick so everyone can be able to see what I see. Okay. Can everyone see the screen? Can everyone see the screen? Okay,
yes,
let me see you guys do. Okay, thank you very much. Okay. Again, guys, welcome to the module 1. This is module 1, introduction to Forex. So in this module, the outcomes or the income which you guys will be actually receiving from me is the understanding of Forex. Well, the differences between Forex markets and the stock markets, and also the currency markets. I forgot to add that. The cryptocurrency, we'll be talking about Forex definition. Why is Forex one of the biggest financial tools in the financial sector? How does it work? Who trades the Forex markets, and the terms and lingos used? So right now, let's just jump start to the first topic. What is Forex? So a lot of people have been asking me this, and I have my own name for it, which I call it the currency playground. Now, why do I call it this? Well, several people get confused about the difference between crypto markets, the stock markets, and the Forex markets. Now, let's compare the stock markets, the crypto markets, to the Forex markets. So, A, stock markets against the Forex markets. So let me just try and symbolize it without reading, but symbolizing it with what is in context. Well, the Forex markets and the stock markets is essentially the same, but the only thing that differentiates them between each other is that the Forex market is you trading foreign exchange, which you are dealing with currencies, specifically currencies, which is essentially the buying of selling of currencies in the Forex market. Well, the stock market deals with shares, such as your NASDAQs. Well, when I talk about shares, we're comparing companies actually. Well, your big companies like your Teslas, like your Facebooks, your Amazons, all of these companies, we are dealing them with stock markets. So we'll find them in the stocks, basically. So number B, the crypto markets against the Forex markets. So crypto trading is the buying and selling of digital assets, such as cryptocurrencies. Well, people have heard about cryptocurrencies, which we have Bitcoin, we have your Lino, you have your Dutch coins. We have a lot of coins in the cryptocurrencies. And we have tokens as well, and we have NFTs, which is non-fungible tokens. Well, and then we have the Forex on the other hand is swapping of one fiat currency for another in hope of the current currency will rise in value, which the trader can reconvert for profits. Essentially meaning, let me just briefly go through crypto. Well, crypto is like we are trading tokens in a form of blockchain. So you are comparing digital assets against digital assets. And in the Forex markets, we're comparing currencies against currencies. So it's almost the same thing, but it's totally different. We are buying and selling, yes, but it's totally different from one another. I think people does understand this concept. Can I move on, or there's any questions that people are willing to ask? Okay, just carry on. Forex in definition. Now, the Forex market is a worldwide, decentralized, or over-the-counter market for buying and selling of currencies. This market determines the Forex exchange price for every currency, which that's why we say in the Forex markets, we say um, we trade pips for value. So pips, we'll get into it when you talk more about currencies, but you will understand the word once while we're talking about currencies. But anyway, let's carry on. It consists of all elements of buying, selling, and replacing currencies at modern or determining price. So essentially meaning that we can buy and sell at a certain price, and we can also wait for a certain price for when we can start buying and selling. So it all goes according to your analysis as a trader, which we'll get into soon as well. And also depends on the type of trader you are as well. And also what type of trend you are seeing at that moment. So let's carry on. Now that the definition is out the way, there is more than we need to actually learn. There are different types of foreign exchange markets that I won't get into depth, such as the spot market, which deals with commodities such as your gold, such as your oil. That's where spot markets comes in. It's essentially the same thing as forex markets, but we are trading gold and we're trading oil, which is your brand crude oil as well. Then we have the futures market. The futures market is prediction of indices such as your S&P 500, your Dow 30, which is your US 30, your NASDAQ, and your Russell 2000. So these are the indices that we'll be looking at when we're determining stocks, or when we're determining if the currency that we are currently trading, is there any potential of it going to the downside or to the upside? Am I not going too fast? Is everyone still with me? I think people are still with me. Okay.
Following.
Okay, following. Thank you very much. Okay, well, then we have the forward markets. Forward market deals with physical delivery of a commodity, which you are doing over the counter, which is, we call it OTC, where you are buying your shares or currency values in the bank, where you are doing over, like selling, like buying and selling over the counter, where you have a third person actually helping you to actually set those trades via the counter. Then we have swap markets, our customized contracts, which are currencies traded in the over-the-counter market privately, which you also do it via bank. So forward markets and swap markets, or OTC, which is over-the-counter markets. So won't really deal with forward and swap markets that much, because we are not dealing with the banks currently. Okay, then we have option markets, trades, contracts based on securities, underlying assets, which means we are trading our NASDAQs, our future markets, but with more options onto it where we are securing a certain asset or we're securing a certain level in the currency markets. So that one we also won't delve that much into. And then our next slide. Why is Forex one of the biggest financial tools in, well, the financial sector? Well, the foreign exchange markets or Forex markets is the largest foreign financial markets in the world, larger even than the stock markets, with a daily volume of $6.6 trillion a day. And I'm saying this with facts. This is a day. The market produced $6.6 trillion a day. According to the 2019 Trinidad Central Bank survey of Forex and over-the-counter divergence markets. Well, another Forex market size stat is that the global Forex market is worth 1.9 quadrillion dollars, if I really say it right. So this is the world's largest markets that we are dealing with currently. And there's a lot of benefits in the Forex markets as well. If you do your research very well and your studies and you go through this course with flying colors, then for sure, you will be actually making that side income from this market. Well, put in another way, it's like 2.5 times larger than the global GDP, which is $5.3 trillion. Now we are comparing the stock markets to the GDP of the United States, which is the most strongest currency currently in the world, and is controlling over most of the central banks in the world as well, which we'll get into depth when we talk about our fundamentals. Well, carrying on to our next slide, how does it work? Now, we are at the million-dollar question. How does it work? Because a lot of people will be having a lot of thoughts about how we do markets. People think it's gambling. Some people call it as fast, quick, get rich scheme, in which is quite not actually. It's really not. There's a lot of research. There's a lot of work done behind you before getting that Zaga that you always wanted, you know? So it's a simple act of buying and buying of one currency while selling another. The combination of these two currencies make up what is known as currency pair. Well, currencies are always traded in pairs, and each currency is a pair is represented by a unique three-letter, such as the Euro USD, which is Euro/USD. This is how all currencies show. So we also have GBP and GBP JPY, which is essentially the British pound against the Japanese yen. And if you say Euro USD, we are saying the euro against the United dollar. So that's how we are comparing our currencies. So it's against a currency against one other currency, which is essentially buying of another against the other. So trading these currencies are made possible on certain platforms such as your MT4, which is your MetaTrader 4, and your MT5, which is your MetaTrader 5, and IQ Options, which is another platform. This was essentially introduced in 2020, I think. All these platforms are available on internet as well for downloading. For those who actually want to actually be ahead and do back testing and stuff like that. You can actually download these MT4s and you guys can have it's essentially a demo account which you can practice on, but we'll get into that into depth once we get into technical analysis as well. There are a lot of platforms now for people to access the power of making their own investments or their own or their new cash cow or side hustle, as well as we refer in these days. Well, actually, we do refer this as a side hustle for some, um, which they don't actually use it that much to make a daily income, you know. But some make this as a business as well. This can be done anywhere around the world to come at the comfort of your bed at home, which we can literally say thank God for technology, right? We can literally say that who can make money sitting at home, just sitting in your bed, and you really waking up with what $2,000 on your lap, and you're just going out and withdrawing and eating your hard work. It's I can really say it's a nice job to have, as a person, where you can actually access these platforms all over the globe as well. You can trade all over the globe as long as you have proper internet connection, then you are fine to go. Since you know, since now you know how it works, let's get to know more about how to find your way through this broad market. Okay, now who trades the financial markets? The forex markets not only has many players, but many types of players. Here we go through some major types of institutions, which essentially we mean the banks, the big boys, the institutions, and traders in forex markets, such as your individual investors. We'll get into depth right now. So now we have commercial and investment banks. Yes, people, we are trading with banks here, and we are literally in their territory. But anyway, let's get into commercial. The greatest volume of currency is traded in the interbank markets. This is where banks of all sizes trade currency with each other and through electronic networks. So when you talk about banks of all sizes, we mean your FNBs, we mean your standard banks, your Capitex, they're all also inside the markets. They are trading currencies as well, such as us, but they are using large size trades, very large size trades. And then let's carry on. Big bank accounts for a large percentage of total currency volume trades, which means they are trading with a lot of money, a lot of money that people cannot really access that much. So that's how these banks are working. So that's why you have percentages in growth of your accounts. That's why you have 0.03% of growth income if money's just staying in there, because they use that as capital, so they can also trade in the markets, But that's information for the banks. Banks facilitate Forex transactions for clients and conduct speculative trades from their trading decks. Whoa, English, guys. But anyway, carry on. Central banks, which represents their nation's government, where they talk about where like the currencies, where I'm trying to really get an explanation for this, like, But I think this is literally straightforward. I think this is straightforward. Yes. Well, carrying on. Are extremely important players in the Forex markets. Well, the central banks are really the important players in the Forex markets because we really need to know what directions they are taking. If I am referring in the long run during this course, I'll be calling banks as smart money. Now, that is where the name of the analysis we'll be using, called smart money, is that we are really looking at what the central banks are doing. And this is how we've been trading, and this is how we are currently trading still. Excuse me. We are looking at what the central banks are doing. So carrying on with definition, Open market, open markets operates and interest rate policies of central banks influence currency rates at a very large extent. So whatever they say really affects the Forex markets. You'll understand this when we are doing fundamental analysis because they are very powerful. They can really move the markets when they say they're moving the markets. Central banks are the most important players that we should really look out for. And I say this with emphasis, guys, because we are really dealing with the central banks here. Well, carrying on the last part of the definition, a central bank is responsible for fixing the prices of its native currency on Forex, which I've just really explained. This is the exchange rate rhythm by which its currency will trade in the open market. So when they set the price on where they are going to take the profits, that is where the market is going to go because they're essentially working with the most largest accounts in the entire world. So that they can really move the markets because of the lot size they are using in the stock markets. Carrying on. So still on the topic of who's trading the Forex markets. Then we have investment managers and hedge funds. So when you talk about hedge funds, we talk about your brokers, we talk about your banks that deal with funds, a lot of funds. But let's go into our details here. Portfolio managers, pooled funds, and hedge funds make up the second biggest collection of players in the Forex markets next to the banks and central banks. Investment managers trade currencies for large accounts such as pension funds, foundation, and endowments. Well, they forgot to mention as well where we're talking about brokers. Brokers are essentially hedge funds as well. So when they say hedge funds, they mean brokers. So everything that has to deal with money and investments has to deal with the Forex markets, essentially the currency market, since it has the most biggest pool of liquidity as well. Excuse me. Now let's jump into individual traders or individual investors. The volume of Forex traders made by retail investors, which is us, we are called as retail traders in against the big boys, essentially, is extremely low compared to financial institutions and companies, as I just said. However, it is growing rapidly in population, in which that's why you are here. That's why you're learning about Forex, because we as retail traders, we want more retail traders inside the Forex market. Retail investors bases currency trading on a combination of fundamentals and technical factors, in which we'll dive into right now. Okay, So let's dive deeper into the type of retail traders or investors as well as the analysis they use. So the type of traders or investors. So we have scalpers. A scalper is a type of trader that is in and out, basically, and essentially gambling, I can say. So, okay. So they're in and out of the market within a matter of minutes, but usually less than an hour. They don't really stay in the market for more than an hour. If they stay more than an hour, then they're not really called as scalpers no more. They're called as day traders. But they use very small time frames such as your 1 minute, your 5 minutes to 15 and 30 minutes as their biggest time frame, which is sometimes they can use 1 hour as well. But what I mean with time frames, I essentially mean the time that a price will move. Essentially, every 1 minute price will move. Every 5 minutes price will move. 15 minutes price will move. Every 30 minutes time will move. Price will move according to the time that is given. So as I've said, scalpers essentially within 1 minute they like to trade the 1 minute. So every 1 minute counts to them. That's money to them, or it's money being lost or money being gained. So it's also part of scalping because you're in and out. You're not in there for the long run. So I'll get into more into details on the type of time frames on in our second module, in which we'll start after this module. Okay, then we have day trader. A day trader is a type of trader that is in the markets during the day and can hold a position for a certain number of hours so they can gain from the markets, you know. So, for example, they can be in the markets from 8 up until 1 during the day. For them, they are done trading, because they are there in the forex markets or in the markets for a certain period of time in the day, you know. So carrying on with the details, they usually use 1 day. So the time frame, which is the biggest time frame, is the daily time frame, which is your 1 day. So after today, tomorrow the market will move. So that's where they use the time frame so they can know what happened yesterday. So it's basically comparing historical data and trying to predict where the future movements, I can say, And then they use the 4 hour as their highest time frames, and then they use the 1 hour, the 30 minutes, and the 15 to the 5 minutes if they really, really use the 5 minutes that much, but they usually stop at 15. And for their entries and confirmations, so they can use 1 hour and the 30-minute time frame to confirm the direction of the bias on which on the currency they are trading at the specific time, and they can use the 15 and the 5 minutes to actually enter the market, just to press that buy and sell when when price reaches a certain level that you are looking at or where you want to enter in the market. Day traders don't leave their positions open overnight. They usually close their positions in the afternoon around 5 or 6, like today. Today, some of them will be closing the positions currently because the market, to be honest, doesn't really sleep. It doesn't have a holiday. It only has 3 days, meaning the weekend only. During the weekend, the market is closed, but otherwise, it's always open. So for them, every day from the morning up until 6, they'll be busy in the charts. Those are day traders. So now let's go to the second bunch, which we have swing traders, where we call them short-term traders. A swing trader or short-term trader is a type of trader that is in the market for a while and can hold his or her positions for days or weeks, depending on how long the trade will play out. So essentially meaning a person can enter the market on Monday and they can close the positions the following Monday if they want, if they still feel confident about their position. If let's just say you are entering a buy today on Monday and you are planning to close that buy on next week Tuesday, just looking at how the market is responding. Will it reach that next week Tuesday? But they really hold the positions for a very long time, which is more than a day. So you're called a swing trader, a short-term trader, if you really hold your positions for more than a day. They usually use 1 week, which was pronounced W1, the 1 week time frame, and the daily time frame as the higher time frames. So that's why they hold their trades very long, because the market to them moves in a week. So that's why they can hold a position for a very long time. And the day as well, the daily as well moves in a day. So that's why they can really hold the position for very long, because they are looking at very high time frames, in which those time frames are usually used by our institutions, which we are calling our smart monies, where the bankers use the dailies, they use their weeklies, they use very high time frames, because they don't really have the time to be going to smaller time frames like us retail traders to actually look at what time or what price is doing at a specific time frame. So they usually use the weekly and the daily as their targets as well. And then they use the 4 hour as their confirmation, and then they use the 1 hour and 30 minutes for their entries, in which my analysis, or the type of trader I'm a swing trader. So I can really hold positions for more than a day. I've held positions for more than a week as well. So yes, it is possible. You can hold a position for a very long time. And I really highly encourage people who are workers to actually go in to be swing traders, because essentially you will have more time to do work on the side, whilst your trades on the other side are really playing out for themselves, because you're really looking at a certain time, which is not now. You're not always next to the charts. So if you really don't have time for the charts, and you are really not worried about money that much, then you can join me as to being a swing trader. Position trader. A position trader is the type of trader that will hold his positions or entries for months to a year, if they really want to hold their positions. So depending on how long the trade will play out. So some people like to sit the trend in. Some can take a trend from a very low price, and they can take their targets is at a very high price, where market is essentially going, and it can take probably a full month for it to reach there, or it can take up to a year for it to reach there, and they're still holding those positions. So this is where you will find your big boys now, the position traders, where they're using big money to actually use these time frames, because even time frames have a certain limits for people who can actually access them, you know, essentially meaning you, as a retail trader, you can enter in the weekly time frame or the monthly time frame, but if you do have the capital for it, you know, I can just put it like that. So position traders usually use the monthly and the weekly time frame. This is the time frames they start with, and they probably end there as well, because they are not in the markets for a very long time, you know. And they use the daily for confirmation, and they can slowly look down 4 hour, or just yeah, they can use the 4 hour if they want to. They're not obliged to use a 4 hour time frame to enter the markets. Again, when it comes to time frames, it goes with the trader on how, on which time frames, when they analyze, do they see what the market is showing them. So as a swing trader, you can be very comfortable in using the monthly and the weekly, plus the daily and the 4 hour, you know. You can use that as a swing trader. Or as a day trader, you can also use the monthly and the weekly as your high time frame bias, and then use the daily as confirmation, 4 hour as you entering the markets. But you know at 6 you closing the trade. So as time frame is essentially the interpreting price in a certain time. Yeah, in a certain time, if you can put it like that. Yes. But anyway, I still hope people are still with me. Bring on. I hope I'm not too fast.
Still here.
Okay. Okay, guys, sorry, I'm gonna stop here, since this let me check the time. Okay, we still have some time. So I want to see if people are still with me. And so does everyone have any questions for now, looking at what we actually were learning today? Does anyone have any questions? No questions?
For me,
Okay, yes.
I think I'll still have to go back, and I'm a slow learner, so
Okay.
I will repeat and listen to it carefully, because in my own time, because I'm trying to write at the same time. So you are very clear and you are detailed. So I think I'm going to understand everything. It's just that for now, it's a lot on the
Okay.
first day. Thank you.
Okay, it's fine. It's fine. It's fine. If you have any questions, you are feel free to ask in the group as well, for any clarity. Then I'll do so. And please, guys, please ask questions. Please ask questions. I really like it. I like people to interact with me, so I can know people are listening. So let's have Nzuzo. Nzuzo, are you clear with the information that uh, you were given, or there's some things that you need clarification on? Okay. So basically, I think people are fine. I think they will just look at the recording, just fast track on what you guys learned. And another thing I just should just put out there is, there will be questions after each and every module. There will be questions, and those questions, you really have to pass all questions for you to be on the next module. So I know that you understand on the module that you came from, So the knowledge from the second module will not be of pressure when you are actually starting the next chapter that will be in very soon. So for today, I'll just conclude our meeting there. I feel like today we covered almost all topics. We covered understanding of Forex. We have covered the different Forex markets and stock markets. We actually went deeper into Forex definition and why Forex is one of the best Forex financial tools in the financial sector. We also went through the different types of traders who are in the markets as well, where we looked at the banks, the central banks, where we looked at hedge funds. We also looked at individual investors as well, where we talked about our scalpers, our day traders, our swing traders, as well as our position traders. But on Thursday at 5, the classes now will be at 5. At 5, we'll continue and look at the type of analysis they use, the investors use, which we'll be looking at your technical analysis. We'll be talking about fundamental analysis. We'll be talking about sentimental analysis as well. We'll be going into the terms and lingos used in the Forex sector. So you can also understand when I talk, when I say bullish, you understand what we're going up. When I say bearish, you know that we are going down. And how we are going down, if we are bullish, we are expecting higher highs and higher lows. If we are going, we're expecting higher highs and lower lows, for when we're talking about selling, So there's a lot of things we'll be touching as well on Thursday, in which I really emphasize people to be in the class on Thursday at 5. So also bring your notes, bring your tools as well. And on Thursday, I will be giving out the questions, and I will be assessing these questions over the weekend as well. So I'm just let you guys know that there is work in this module as well. It's not only me talking, but I want to see and understand if you guys are on the same page as me as well. I feel like I covered everything for today. And yes, I'll stop the recording now.